Okay, welcome back, everybody. We are now going to be moving on to a session with FDIC and FinCEN. This will be a spotlight session. I wanted to introduce Sultan Megji, who's the Chief Innovation Officer at FDIC, and Kay, if you can get your camera and microphone activated. Kay is Senior Counselor to the Director of FinCEN, looking at digital identity inclusion and digital payment infrastructure issues. This was if I call it a last minute addition to the panel. Last minute's really Carol House telling us last night she was going to speak at around 10 last night, a little bit later today. But it was just about a week ago that FDIC and FinCEN announced an upcoming tech sprint focused on measuring the effectiveness of digital identity proofing for digital financial services. So I'm really thrilled that Sultan and Kay, who are leading this effort, agreed to come talk with us today about what they're hoping to accomplish through the tech sprint, where many of you might be able to potentially participate in this, and as well as have a broader discussion around the need for better digital ID solutions in the financial services sector. So welcome, both of you. I'm not sure between the two of you who wants to start it off, but would love to hear about upfront, why do FinCEN and FDIC each care about this topic? Why does it matter to your agency's mission?
Go for it.
Oh, I was going to say Kay's the expert here. We should let her go first. Well, here I'll say a few words and then Kay will correct me. How's that? So it's really straightforward. If you look at so many of the things that bring risk to the financial sector in the United States, they anchor on identity. You know, I'm an old school tech guy, so I go all the way back to the first attempts at digital identity back in the 90s. And we've been working at this for a long time. But the thing that's really exciting about it now is we have a decent amount of risk in the system that we've built systems around to navigate. But as new technologies, new products and services come into market, new discussions, you know, this is something that we need to innovate on. We need to drive new and interesting things into the system. And I'm just super excited to partner with FinCEN on this, and especially Kay, who's pretty much the coolest person in digital identity. And I'm just going to turn it over to her then to talk more thoughtfully about this than I can.
Thank you very much, Sultan. So for those that don't know me, I joined FinCEN in June. I'm in a newly created role in the director's office. And in that role, I get to see all the intersections of identity across all the work that FinCEN does. And that colors my view. And I've learned an enormous amount. And when I start to think about it, you know, I remember sitting back at this conference a year ago. So I wanted to take a moment, just thank Jeremy for inviting us to be able to speak about it, and also think about the road that I've traveled over the last year. This is a really important conference, and I thoroughly enjoyed it and look forward to it. And then secondly, I wanted to thank Sultan, because it was actually in the first conversation that we had together that I asked, how could we work together? And he said, how about a tech sprint? And they had originally, the FDIC came back and they proposed AML, BSA, countering CFT. And I said, what about digital identity? And so we started kind of thinking about it. And let me explain why identity is important to FinCEN. You know, its role in the financial sector is to safeguard it as the primary administrator of the Bank Secrecy Act and the U.S. Financial Intelligence Unit. Our focus is on illicit finance, money laundering, and related crimes like countering the financing of terrorism. And we work with domestic regulators like the FDIC, law enforcement, and international partners in order to identify and investigate illicit activity across the industry. And when you think about all of those roles, identity is at the heart of it. But before we even talk about FinCEN, identity is at the heart of all financial services, and it's core to trust. And so we recognize that the ability to assess risk is only as good as your ability to figure out with whom you're engaging. And so it's pretty darn important to get that right. And I think when I sit back, for those that know, prior to joining FinCEN, I was working the last couple of years on COVID-related programs. And I think COVID has highlighted the weaknesses in both our payments and our identity system. And it has made KYC that much infinitely more challenging. And so, when we were talking about this, we were thinking about we need complex modern tools to address the fact that we are increasingly more in a digital world. And we were already in a digital world. It's just that a lot of people don't want to go into branches at the moment. So we think about the fact that there's the uneven implementation of IT standards has led to data hacks and personally identifiable information. That combined with a lack of digital government credentials means it's hard. And you guys know, I'm speaking to the audience, right? It's hard to figure out who anyone is in a digital world. And so given that identity is a network business, we're excited to be here because the whole point is to invite lots of different people throughout society to come and collaborate with us, because it's going to take the intellectual power and creativity of all of us to solve this weedy problem that is a shared problem. That was a longer version.
No, that's good. So tech sprint sounds really cool. What is a tech sprint exactly?
Well, a tech sprint it's something we actually borrowed from our friends at FCA and then customized it to fit our model. So I'll tell you about the FDIC tech sprints, which is the model we're using for this one. The idea is that a variety of participants, private companies, individuals, government agencies, nonprofits, and everyone in between partner up into groups and they submit proposals to us. And they say, hey, given the scope of your question, here is a hypothesis for something we would like to explore with you. And we go through a rigorous application and judging process, and then a select group gets brought in. And over roughly 6 weeks, usually, they have tremendous access to us. They have access to our staff, to our people. We point them to data. We point them to other stakeholders to help them prove that hypothesis. And at the end of that 6 weeks or so, we do a demo day. And we have thousands and thousands of people from all over the world who join the demo day, senior government, everybody, to look at what this outcome is. And what we're trying to do with it is really a couple things. Number one is to demonstrate that there have been so much advances in technology that you don't need 4 months and an 8-figure RFP process to look at something interesting. It's out there. There's some great stuff out there already. I mean, the identity community is a robust one that's been around for a long time. So I fully anticipate getting amazing applicants from every single person listing here. And I'm scanning all the names, and we'll remember this if you don't. The second big thing we like to learn from this is that we need to see what the state of the art that's out there and identify it with our view of what we think the art of the possible is. Because as we continue to go down these paths, more technologies, more activities, we absolutely have to figure out how to work together better. And just like with cybersecurity or any of these other issues we're struggling with, these are things that we're better together and we're stronger together. And so the final thing we get out of it is it, I think, helps the applicants, but it also helps us as federal agencies figure out what to do next. And so it's one of the reasons we picked proofing. There is never going to be one identity system to rule them all. We could call it the Sauron system or something like that. That won't go anywhere. I mean, back in the X509 days, we tried something like that and it failed epically. What we know is it's going to be a network. We know it's going to be a federated network, and we know that we're going to have to figure out how to establish trust between different systems, and trust that can be independently audited and risked against, which, by the way, mimics the exact structure those of us in the federal regulatory community do, because we don't, most of the time, we don't go dot I cross T through a firewall configuration of a bank or a broker. We see that they have the systems in place to manage that effectively. Well, great. We have a framework, and we have now an opportunity to create a parallel model that allows us to identify how to ensure that we trust the various identity systems that are out there.
Thanks.
So,
go ahead, Kay.
Can I just 1 second? I figure, you mentioned the problem statement. Maybe we should tell the problem statement. So it's the question is what is a scalable, cost-efficient, risk-based solution to measure the effectiveness of digital identity proofing to ensure individuals who remotely present themselves to financial institutions are who they claim to be? A mouthful.
Got it.
Go ahead.
And why is it you chose to focus on this topic versus others in identity? What was it about this one that stood out?
You want to go?
Okay. Oh, I was waiting for you. So one of the things I like about proofing is it's got two components to it that I get excited about. Number one is it allows us to really look at a lot of robust and mature activity that's out there, because there is good activity out there. I think, I just heard the tail end of the FIDO discussion, which has got obviously some great activity going on in there, right? The second thing is it is eminently usable. Right. This is not a 3-year research project. This is not something that we're going to sit on for a while. I think, I personally am very, I think digital identity is one of the things that's really going to make or break 2022 in a lot of ways. And we have to get to a point where we're having this. There are tremendous digital identity conversations going on in the market, going off in government and a variety of other places. We have to start closing the loop on this. And this was one area where we saw a direct value that could be created and navigated for this. I don't know, Kay, you want to throw in a couple of other sentences there? This was my love.
Well, I would just highlight, we're on the precipice of some really interesting developments. The technology that's coming to the fore, we're looking at the emerging mobile driver's license environment where you've got dynamic evidence that's updatable and interoperable. That's one of the opportunities. Obviously, we've seen the challenges with exposed PII. And so when we think about digital identity proofing, it's foundational to financial services, and it's an entry point to other services on which you can build upon. And when we think about solutions, obviously, different financial products and different customers vary in their risk profile and their proofing requirements. And so a new client that has a low dollar debit card is going to have different risk than a long-term client that needs to do a large dollar transfer for its mortgage, or do a transfer to a wallet for a digital asset transaction. And so when we were thinking about it, we were thinking about the sense of there are lots of solutions out there. How can we measure the effectiveness of proofing and provide the capability to calibrate proofing commensurate with the risk of the client and the products? And certainly one of the other things that I think working with the FDIC has driven home is there are a lot of small and medium-sized banks that have limited resources. And so when we're thinking about it, within that, the long problem statement that I read out, one of the things is cost efficient. And so we're thinking about how do you square that in this increasingly digital environment?
It's a good point that, financial institutions that come in all shapes and sizes, and, the types of sophisticated things that a top 10 bank might be able to do with their, resources relative to a small community bank or a credit union often vary quite a bit. I mean, what are some of the disparities you see, whether it's an identity or just other security tools, that in terms of what's out there today?
Yeah, I mean, that's such a good question, Jeremy. I mean, roughly speaking, we have just shy of 10,000 depository institutions in the United States. Slightly more than 4,000 of them are banks. The rest are credit unions. There are roughly 50,000 fintechs or technology service providers to the banking system on top of that. So you have an incredibly large number, call it rough order of magnitude, 50,000 corporate entities just here in the United States. You have about 100 different regulatory bodies that you have to interact with in the same way. You look across those and you can have something as small as 20 people in rural Missouri, an old ag bank that has, a fairly small amount of money, and they manage everything through a paper ledger or a copy of, a version of a spreadsheet installed on somebody's computer from 6 years ago. And you have a big scale up, right? All the way to the largest in the land. At FDIC, we kind of deal with that kind of middle to small group of financial institutions, right? We don't, the Fed and OCC manage the biggest, 50 basically. We deal with everyone else. And so, we can't have a system we can't have a program like this that precludes having some very, very advanced internal technology. We can't have a system like this that precludes having a technology staff of 30. You have to get up into the billions of assets in banks to have a technology team more than 10 people usually. That's, kind of an average. And, of those 10 people, you've got people running around worried about cable modems and photocopiers and, desktops and stuff like that. So, we have a big amount of disparity. And so we have to think of ways that allow these organizations not just to, prove that people are who they are when they're creating, wanting to open an account, for example, but as we look at transactional activity and audit and all the other things these entities have to do, we have to have systems that are kind of fit for purpose for the entire spectrum.
Thanks. Love to dive into more. How is the TechPrint structured? What kind of participants are you seeking? Is it open to companies, nonprofits, individuals? What does an ideal mix of participants look like?
Yeah, all of the above. I think I kind of highlighted that we're looking for all of those. If you look back at our last few tech sprints at FDIC, I have noticed the strongest teams include active participants in the financial sector, so banks, credit unions, along with technology providers, along with organizations, usually nonprofits or academics that have a specific, question set that they're asking, and then they partner together on a team to work together. That has historically been the most exciting ones. And you can look at the FDI Tech website off fdic.gov, and you can read about some of those and some of the previous winners. But for us, one of the reasons we leave the problem statement fairly vague is we're looking for that creativity from people like everyone listening to our voices right now, because I know for a fact that there are people, and I can see a lot of the chats and the Q&A, flying by, really good thoughts there, that there are people who have spent their careers trying to figure out some of these really gnarly problems. And this is a great opportunity for them to step up and participate in the discussion.
Great. And, it's, I think, a 2 to 3 week sprint. The announcement talked about, what does life look like if I'm part of a team during the sprint? If I'm somebody who's on the fence about applying when this opens up later this month.
Do you want the positive reinforcing answer or the slightly?
Is there food, water, and sleep provided?
We're a government agency, so you can provide your own food and sleep. When I've done these in the private sector, I lock somebody in a room and slide pizza under the door usually. But no, we leave it to the organizations to really define the resources they want to put into it. We don't do that. I'm trying to keep these so close to what we do in the private sector because we're trying to get to that value. Some groups, it's great. Lock them all in the room and they'll figure something out over a weekend. Other groups, they need to, have emails and meetings and all the other stuff. We aren't precluding how people work together. We're just saying you're going to enter it with a proposition. You're going to have access to the SMEs and the resources appropriate that we've designated for this. And then on the back end of that, you're going to have a result that you get to talk about. And we want it to be open and creative and thoughtful. And I'm sure, if you look at some of the other ones, like our inclusion tech sprint, if you look at the 3 winners, those could not be 3 more different projects. You had one of the largest tech companies in the world, and you had a community-oriented group, that was 3 people. So there's quite a heterogeneity.
Let me actually ask you about the inclusion piece, since it's something we talked about quite a bit in our last panel. I would, sort of summarize it as saying there's a lot of different companies innovating in this space when it comes to remote digital identity proofing. A lot of them are using AI and machine learning in really constructive ways and being thoughtful about it, and working with outside experts on how to engineer it in a way that there aren't, material bias concerns. A lot of companies aren't doing that. How do you guys look at that as a factor when you're looking at measuring the effectiveness of these solutions in terms of, effective for whom?
Well, I'll let Kay throw her thoughts in here, but for me, I look at the outcome, right? A well-defined problem statement, a well-defined thesis from one of the teams coming in will make it very clear what a good result looks like. I spent most of my career in the private sector, so I don't like process for the sake of process. I want process because it leads to a positive outcome. And this is an area where we need some positive outcomes, right? So that's, in as much as I'll be judging some of these, that's one of the things I'll be looking for. Kay, you want to throw in a thought or two there?
Well, I think, when we think about inclusion, it comes in both the universe that applies. So to the extent that there's an organization that you think it's relevant to, please forward the invitation, encourage people to apply. And, we certainly have had that in the back of our mind as we sit and we think about the problem statement. I think we've approached it. You'll see in the larger write-up, we make references to MDI and CDFIs. And then we talk about the affordability bit of it. We're also thinking about on the judging side, how we end up doing it, because we do think it's quite important. And we're looking at all of these issues and watching standard setters, et cetera, and thinking about how you can address inclusion. It's kind of the second, as you mentioned, the second of my responsibilities. So we're hoping to drive down the cost of financial services through being able to proof people more effectively. There's both a direct and a secondary implication to inclusion, I think, that some of the time people don't think about. So we're hoping to hit on both of those.
Thanks. Got a couple of questions coming in from folks. One is, can multiple companies apply and ask to be grouped together as a team, or does the government decide who's going to be on what team?
No, I would say if groups want to work together and put a single application in and reference, all the teams and all that stuff. We aren't putting teams together.
Got it. And if participants are worried about protecting their IP,
their IP is their IP is their IP from our perspective. They aren't gifting it to us. We don't have access to it. If there's anything that you want to, redact when you're making a presentation, redact it.
Got it.
But the presentations are public, right, Sultan,
yes,
and they'll be posted on the FDIC website.
They will. There'll be a recording of the presentations and everything. So,
all right. So this is something people should be going and keeping that in mind.
Definitely put all your source code in there, and definitely just like scroll through it, right?
Another question from the audience. When you talk about identity proofing in relation to financial services, is this, looking at something like name, date of birth, and SSN, or are there other things you're looking at as well?
Kay, do you want to jump in? I mean, the short answer is it's much broader than that. I mean, it's the entire scope of PII. And then you also remember that, especially with both of our agencies, identity is not just when you open an account or want to open an account. It's also what you're doing with that account. So, you might be wiring money around, you might be, connecting it to fintechs. I mean, a variety of other areas where, especially if the account we're talking about is with a bank, there are rules around that. And so, it can be, transactional data, it can be, sender receiver, the metadata around that. There can be a lot more data beyond that.
We've focused, I think, on the identity proofing bit. And, when you're talking about solutions, Sultan, maybe I'll throw out 4 of the kind of outputs that we suggested might be possible solutions, although we underscore there is no one size fits all, and we're looking for broad. But we highlighted in the large write-up that you'll find measuring the effectiveness of digital identity proofing on the FDIC website. We talk about a scoring model, research-based observations to enhance existing solutions, AI, machine learning, programming applications to red flag questionable IDs that would potentially lead to a dynamic scoring model, or other technological solutions to answer the question problem statement that I read out earlier. So again, it's very broad, but we have focused kind of on the front end, but the front end being foundational to and an entry point to other financial services. It's more on the proofing than it is on the authentication.
Got it. Another question. What are the rules for participants? Do I have to be an American?
There are a few rules, but I would say when we announce the application process here, which is coming up shortly, you'll see what it is.
All right.
So we're working on both the prize criteria, the criteria on which you'll be judged, and also the applicant criteria. And I think, building on what Sultan said earlier, we're looking for a broad set of people, not just engineers and technologists, but problem solvers from all different walks of life, because we're looking for diverse groups that are going to come out with new ideas and concepts. And I listed off, a couple that are possible, but obviously we're looking for new ideas, big concepts.
Got it. I see another question coming in. This might be getting in the weeds a bit. If I'm doing a demo, will FDIC and FinCEN cover the cost of the cloud hosting environment for the demo day?
You want the short answer is no.
All right. That's an easy answer. And I asked about this a little bit before, but I'd love to get a little more specific. Again, for those who aren't familiar with tech sprints, what have been some of the most impactful ones that FDIC's done? I mean, were there some things you can point to in the market that
Sure.
things are different now that did not exist before we had done one of these?
Sure. So, we've done two that I'll highlight. We did the most recent one we did in the late fall was on resilience. Operational resilience is a critical issue, right? As we become more and more technology dependent, and there's more and more heterogeneity of technology in the market, mainframes from the 80s all the way through to, the latest and greatest, digital crypto wallets that people have on their phones, right? All of that exists, in parallel with each other. And so we did one that really ended up with a great amount of work focused, and it was a little narrowly focused on the banking system because obviously that's our primary remit. But what it did, it came to a variety of discussions, sadly, not a lot of which I can talk about publicly just yet, but it did cause us all the way deep in the bowels of our policy shops and all the way through the technical teams that actually evaluate banks at FDIC to kind of throw some new questions in, throw some new thoughts in, tweak how we do things. And so from an FDIC perspective, it was incredibly valuable because we have to get better at operational resilience, and I'll highlight one great example. Climate is not something that we can ignore. The easiest way to think about it is, let's just say there's a bank in the Midwest, but they happen to have a lot of commercial real estate mortgages for small businesses in, I don't know, around Miami. Right. In the traditional model of how we do risk analysis, that, we wouldn't necessarily catch that on a first run. And now we're paying a little bit more attention to, for example, geography of where assets are that sit on a bank balance sheet. The second one we did slightly earlier was on inclusion. And that one was very interesting because we were trying to solve what we call the last mile problem. There are a lot of people who in this country who, they sit at home and they can't walk to a bank branch. They can't walk into a bank and just find the products and services they want. And so how do you get there? And so how do we create easier on-ramps for digital capture and onboarding of people? So that, like I'd say, you're sitting at home, you have your smartphone, your laptop, your phone, whatever, any sort of technology, you could sign up for a bank account right there. And it doesn't matter if it is the biggest bank in the country or it's a very tiny bank because you're, again, let's say in a rural part of the Midwest, right? You want to work with the bank that is right down the street from you in many cases. And so we don't want to just force everyone to go, smartphone full bore. I know my mom would never go for that. She always likes knowing that she can drive by the building of the bank. And there are a lot of people who feel that way. And so there was one project, and you can look at the website. I as a government official, I really have been programmed not to use the names of companies, so I won't. But there was one project where they created a very modern digital onboarding platform that could connect to legacy banking technology. And that really hadn't existed in the way until after this tech sprint. And that is a piece of technology that's out there that banks are signing up for. And it makes it very easy for the local bank to give people a place to sign up online for a bank account.
And so it sounds like the outcomes could be a couple things. One, it could be somebody might come out of this and start a company based on what came out of a tech sprint.
Absolutely. In some cases, it's a company. In some cases, it's a new product for an existing company or companies. In some cases, it might be a research paper. We've had all of the above, and to us, all of them are successes.
Yeah, well, and I think the other thing that stood out from what you were just saying a couple of minutes ago was another outcome may just be that you present something in a way that causes the regulators to start to rethink how they're looking at an issue, which in and of itself, look, certainly knowing how much people spend in this town trying to influence regulators, it's a unique education opportunity, perhaps.
I could not possibly comment on the last half of what you said, but I would say that I think, for those of us in the DC in the Beltway universe, it is a bit of an echo chamber. And so hearing from people who are out there doing this, really out there trying to help their communities, out there helping their constituencies, it's always great for us to hear this. Even if we don't necessarily agree with it, but when you have statute and regulation that goes back to the 1930s, we've obviously, through the lifetime of our agency, had to do things to keep it fresh and keep it up to date. And the pace of technology change, the pace of the demands from the average American that we have to protect and serve here, there is a lot of evolution there, and we've got to get faster. And so this is a great opportunity for us to hear things in a much faster timeline that potentially also allows them to get into the market in a faster way.
Got it. And so I had one more question. I'm trying to go back and forth through stuff I want to know and what others are asking. if I participate in the tech sprint, can that be used in participants in their RFP response or in their marketing materials or go-to-market activities? So I think it says, can I say I participated in this and then advertise that?
Absolutely. Don't ask us to validate and say that we would love your company or love your product, but certainly the rules do allow, and we do publicize it. So if you go and look at the tech sprint, you will see that we publicize, the companies that participate and stuff like that. So
got it. And then the other question was, are you interested in solutions that might go beyond just traditional remote identity proofing to support things that could be video, that could be in person, looking more holistically at identity?
I think that's a really great question, and I would love to see some hybrid or broad spectrum solutions. I mean, I will say that I spent a lot of time with the FIDO community quite a while ago, back when biometrics were just starting to become a thing, right? And that's not recently. And one of the things that we I think had a lot of great conversations about was the understanding that in many cases, great identity is multi-dimensional, right? It might be digital, it might be in person, it might be video, it might be other biometrics, it could be GPS geolocated, right? There are a lot of different ways, depending on the use case, depending on the kind of proofing you're trying to do to make something interesting. So if you have a reason to pull some of these together in a unique use case that you think is valuable, I think we'd love to hear it.
Yeah. And how many applicants, how many teams are you going to be selecting?
Open question, but I think Kay and I both kind of say 10-ish is probably a good number. I think too much more than 10 and people start knocking tapping out from other work and stuff like that.
Great. Well, I think that's all the questions I had from between me and everybody else. Are there any things we should have asked you today that we haven't yet?
I don't see anything. We also on the FDIC website have, if you have any follow-up questions that end up popping up, you can either contact me or Sultan, or you could pop an email into, I think it's innovations@fdic.gov.
Yeah,
and we'd be happy to do it.
Yeah, it's innovation singular at FDIC.gov. But if you just go to the FDIC.gov/FDITECH, that's your kind of your one-stop shop for information and follow-ups and all that.
Perfect. And I think I had pasted something in earlier in the chat, but I will do it again one more time since the chat has scrolled up quite a bit. Really appreciate you, both of you, coming. I know Assistant Secretary Rosenberg is in the queue. We're going to kick off with her at 2:20. Thanks again for this. I hope you get tons of applicants and do awesome things from this. We'll take a 2-minute break and sort of swap you out and bring in the Assistant Secretary, and we'll be back right at 2:20. So thank you, everybody.
Thanks so much.
Thank you.